Some of the biggest stocks in the markets, the most popular, the most widely held companies, FANG stocks, by which we mean Facebook, Apple, Amazon, Netflix, Google, throw Microsoft in there, throw NVIDIA in there. These stocks are down huge over the last week or so on what people are calling an interest rate scare, which is odd because none of them are really particularly debt financed and shouldn't have much to do with that. But Michael, you dug up some really, I think, mind-blowing statistics about how much damage we've seen in such a short period of time.
So this just goes to show what type of market environment we're in. Amazon is the most oversold it's been since 2014.
Okay.
Based on RSI. Okay. Which is at 24.
RSI is relative strength. It's a measure of momentum in the stock.
Right. So maybe this is arbitrary, but below 30 is technically oversold.
And where is it now?
It's at 25.
So Amazon has not had an RSI below 30 in 4 years?
Well, below 25.
Below 25, okay.
So it's 15% off its highs, but...
How much do you recommend everyone goes out and buys?
But it's still up almost 50% on the year.
It's up 50% on the year and is the most oversold it's been in 4 years.
Yeah, so...
It's an incredible moment in this market, like a huge turning point.
So on the one hand, people have been saying, watch out, when these stocks start to get hit, it's over.
Meaning it's over for everything.
For everything. That
Okay.
These have been immune. The smaller stocks have been getting hit. These have been carrying the entire index higher for the last 5 years. And when they get to these names, which they are, watch out below.
So you just tweeted this insane chart. We'll throw it in the notes below. FANG stocks lost $175.5 billion in market cap yesterday. By far their biggest dollar decline ever. So let's unpack that. These are the 5 biggest stocks, or 5 of the biggest stocks, all technology. Lost a combined...
/ communications.
Right. Lost a combined $175 billion in market cap in one day. Of course, the market caps are bigger. We have to mention the denominator, but even still...
It's a stunning
huge number. It's
a
stunning number. Yeah. Now, that money went into money market funds, and it probably comes back into these stocks. Or
you don't know where the money went.
No, of course not. But if you sold Amazon, maybe when you come back in, you buy Apple.
These stocks, Facebook is down 30%. Netflix down 22% from the recent highs.
Let me stop you. Do you think that most investors are aware that Facebook is down 30% from its high? Because you still hear people talking about it.
People that own Facebook are.
Yeah, I guess if you're long Facebook itself individually, you know.
You damn right you know. Of course you know.
Let's talk about Netflix. The stock has had a huge sell-off like everything else. However...
Yeah, so Netflix is down 22%
okay,
from the highs,
from its high,
but it's up 71% on the year, and
it's still YTD,
and several thousand% over the last few years.
Okay.
So now there's people saying, like I said earlier, once these names get hit, it's over.
Yeah.
Then there's other people that have been waiting for these names to pull back to get in.
Right.
But of course, who's buying today or yesterday?
Well, so a lot of the technicians that you and I are friendly with and talk to, I was reading Krinsky's note from last night. His note is that escalated quickly.
Yeah.
But he was looking at all these measures of washout, the same reason the same things that you and I talk about. And he was basically saying look at the percentage of S&P stocks still above the 10-day moving average, a very obviously short-term metric, but it's complete washout.
Gone.
Right.
So if you were going to panic, you should have done it last week before everybody else did.
I prefer to panic late. I don't know about you.
Well.
So let's talk about the panic thing really quickly. Forget just FANG stocks, but just overall, I'm going to coin a new term that I really like. I haven't used this yet publicly.
I'm so excited.
Okay. I'm going to say that this has been an orderly panic. An orderly panic. How's that hitting you?
All right.
I'll tell you why. I think so much of the money that's trading right now is not being traded consciously by people. I think it's a lot of software programs, and a lot of them are programmed to do the same thing, which is when there's a pickup in volatility, they're programmed to get out of either a certain percentage of their holdings or certain holdings specifically that they feel are higher beta or higher risk. So that can go on, and people can take note of it, but they don't necessarily react. I know there are real people selling too, but...
So Todd Rosenbluth tweeted yesterday that NAV did not deviate from ETFs at all. Maybe he was mentioning one in particular, I forget. But it's so hard to gauge sentiment.
So NAV is the net asset value of an ETF's holdings as opposed to the price, which is where you buy it and sell it. And those two numbers should be almost identical. Sometimes when there's a market dislocation, those two things can deviate for a short period of time. That's what you're referring to.
Right. But my point is looking at Twitter, and I mean, it's so hard to gauge what sentiment truly is because you see people going ballistic and,
Right.
You paint your own picture. So it's really hard. I mean, I don't know. I guess it seems sort of orderly.
So far, it is an orderly panic.
I mean, but stocks are S&P still up.
Help me make this term happen.
It's mediocre. Stocks are still up 5%. S&P's up 5%. Nasdaq's probably up double that.
Well,
chill out.
so beneath the surface, though, as usual, it's way uglier.
Of course, it always is.
So you were pointing out yesterday. There were double the amount of Russell 2000 stocks, which are small caps.
So half of the Russell 2000 is already in a bear market.
Half.
Half.
And for the S&P, it's
like
only
23
25%.
Yeah, something like that.
Maybe a little bit worse today or a little better.
Yeah.
The one thing that I noticed that was interesting is that this whole thing started with rates going up faster than people expected. And now rates are easing because the stock market scared everyone.
Right.
So it's ironic to have that happen.
So
and
it's sort of like circular.
yeah, and even if you looked yesterday, the stocks that tend to trade more often with rates, so the bond-like stocks, they were green most of the day until 3 o'clock. You looked at like Verizon, General Motors.
Yeah, bond-like stocks have done well over the last week as rates rose. So it's sort of confounding in that respect. And I don't want to be like the wet blanket of context, but seriously, stocks have been up for 9 straight years. Extraordinary gains. We're still up on the year. Heaven forbid we give some back. Like we're coming off the best quarter in 4 years. Relax.
Yeah, I don't know. I want it to go up every day. Why can't that just happen?
I don't mean relax as if stocks aren't going to go lower. They can go a lot lower, but that's what they do sometimes, and
Yeah.
you got to be ready for it.
Yeah, and it doesn't actually mean something's wrong with the economy. It doesn't mean that you're going to lose your job. It's not every downturn in the stock market is the final downturn.
And if you are contributing to your 401k every 2 weeks, like a lot of people are, it's actually a good thing. You want lower prices.
So let's end on that note because that was my point. I was talking about this last night. I said it on MSNBC today. 80% of the labor force right now is under the age of 55. 80%. These are the people that every 2 weeks are putting billions of dollars into the market. Why should they root for record high prices to make those contributions? It makes no sense.
Whenever we get a big sell-off like this, my friend always texts me, can you please make the stock market stop going lower? And I say, dude, you want it to go
And
lower.
your friends are like 14 years old, right? What's wrong with these people?
You want it to go lower.
All right, listen, it'll be okay. We'll talk to you soon.